Hey everybody, it's Brian Shannon here from Alpha Trends. The market is experiencing a little bit of weakness here this morning. As you know, Twitter's down, so I'm just going to post this to the alphatrends.net website, and anything that I think is important, just going to have to continue to check back throughout the day on Alpha Trends, or we do have that button that allows you to subscribe to the when there's updates. So the advanced decline isn't really that bad. It's 1,600 decliners for 1,300 advancers. Had been worse earlier, but we're recovering a little bit here. The market, you can see on the 10-minute time frame here, looking at the S&P 500. We've got the important support has held. We held actually pretty comfortably above it in the SPY, but we do have this resistance up near 101 right now. If the market can't get back above there in the next day or two, it might bring about a reason for people to think it's time to take further profits. As I said yesterday in Twitter, it seemed like we've been on this game of musical chairs, and the music's just speeding up and speeding up and speeding up. And ideally, I think a pullback, maybe 5-8%, get us down towards the 50-day moving average over the next couple of weeks, would be really nice to see, and people will start complaining about how the market stinks and the low volatility in the summer doldrums. But that would set the market up for the next leg higher, because here on the weekly time frame, we are extended, obviously. So I'd like to see a pullback and then a continuation. But let's take it one step at a time, because we don't even have the pullback yet. If we begin to pull back deeper, it might just turn into a failure. Right now, what we need to be aware of is it looks like we have a lower high for now in the S&P 500. It's right at that 5-day moving average, which has just begun to flatten out. So that's a sign that the momentum is slowing somewhat. Yesterday, I had pointed out the possibility of how a market would turn is that if we were having trouble near the 5-day moving average, and I was using this as an example, is that what would have happened back here if we were going to fail, I think it would have been something like this, where we saw a pattern of lower highs and lower lows emerge, and then that would obviously, the moving average doesn't move unless price does, so that would drag the 5-day moving average lower, and then we begin to see the recovery and that sort of thing. So we're not there yet, just trying to put some scenarios out there on the table for you to consider. The NASDAQ does look a little bit similar to this pattern right in here. It appears as though the NASDAQ is right here right now, because when we look at the NASDAQ, we're just below that 5-day moving average. We have a lower high that seems to have stalled just below the decline. It's now declining that 5-day moving average. So that gives us reason to have high caution right now. 39.40 was successfully defended this morning. 39.35. But if we see you can see on the 10-minute time frame the lower highs and the lower lows in here, and that is again due to the fact that the semiconductors are weak, and we're below that level that I thought was going to be pretty key, the 24.80. So that gives us reason for pretty good concern here about the semiconductors, and if the semiconductors are going to fail, then the rest of the market should follow suit. So we have the lower highs, we have lower lows right now, and you've got to be very defensive in terms of these semiconductors. They have now turned much more neutral and semi-bearish at this point. So that's on the 30-minute time frame here. On the daily time frame, we're still in a really nice uptrend, but maybe we see it pull back down towards the 24 level, and we test the 20-day moving average. I think that's a likely and very possible and likely scenario that we come down, towards that 24.20 level in the SMH. If you're looking for the leveraged semiconductor index that's bearish, that's SSG. That's the double short exposure. Not something I would recommend to people, but something that you want to be aware of. The Russell 2000, we've got our key level at about 55.5. We're still above that 55.5 level, but we are showing lower highs, and we are seeing that 5-day moving average it's starting to turn sideways to slightly lower. So right now is really the time where the market is giving us our first real evidence that the sellers are getting more aggressive. Now, that doesn't take that doesn't hold true for the financials or the second shoe. That is the IYR. The financials have run real, pretty far, pretty fast, and it's been a great rally. It might be getting a little extended here and ahead of itself. You can see that on the 1 minute time frame, we're right at the daily VWAP, maybe breaking below 14 and a dime. We see a little bit further profit taking this afternoon. And by the way, the S&P 500 is kind of battling with that daily VWAP right now and having trouble with it. So, below 100, which is a psychological level. I'm not sure we're going to get a whole bunch of damage today because we do have the jobs number tomorrow. But be aware that it's possible. It's always a possibility. Nasdaq is similar. Kind of trouble with that daily VWAP, as is the Russell. That it's holding above it, but not very convincingly. The IYR is the big story here. The last few days, we gapped up today through that level. I think it was 40.08 or something that I was pointing out yesterday in the daily time frame that we hit 3 times, or maybe 40.15 that we hit twice, once in November, once in December. But right now we had a sharp pullback right down to the 2-day volume weighted average price. Nailed it perfectly. Got a bounce in there. We're still above the daily VWAP, maybe back below this level. Then we'll go back and test those lows. We've come real far, real fast in these. Seems kind of like a parabolic move in here. So just be very careful if you're trying to stretch the long side in here, and be twice as cautious if you're trying to pick the top, because picking tops obviously is a very difficult job. Let's take a look at the stocks that we've been mentioning. We've been involved in med assets. We've got our stop right now at $19.35. Hopefully you'd seen that tweet earlier in the day. It doesn't matter actually, because we haven't it hasn't moved since then. But let's keep it there and give the benefit of the doubt. It holds up, so let's keep that. Unisys, we gotten involved right here, sold a third of it there, sold a third of it here yesterday. We've got our stop at $1.90. Let's see if we can hold this one. If maybe this stock can hold on those gains. It's a big stop, but it ensures that we still get stopped. If we get stopped out, it's with a nickel profit, and maybe it turns into a bigger mover, because we've still got this weekly time frame that could potentially fill in this hole here, and we've taken some real nice profits off, and so we're in a position of strength. That's when it pays to be bulls and bears make money, greedy pigs get slaughtered, disciplined pigs get big winners and get rich. So Fleur, we're short in there. And let's lower our stop right now and Fleur to let's put it about $21.62. Amlin, I had raised the stop in here. We got involved at 15 and a dime, and I raised the stop to 15.13. So we're stopped out of that long position with a 20-cent gainer, small gainer, but with the market weakness like this, it's good to harvest some of your profits if that's what the market tells you to do. The feed trade never triggered, so no reason to get involved there. Lockheed Martin, we did get short below 74.20, and then got stopped out right here. So a 65-cent loss in Lockheed Martin. So far it's turning into a good loss because the stock continues to go higher. You can't love your winners, but you can accept them and learn from them, and be disciplined in the implementation of your stops. St. Jude Medical, we're also short 37.95. Let's lower the stop in there at 37.90. The stock is finding a little bit of support at this 37.50 level. If that level gives up, then I think we've got a quick move down towards about 36.5. So you look at the 90-minute time frame, we could 36.5, 36. Some of the ideas I'm watching for this afternoon, I'm keeping a closer eye on these solar plays. As we had known yesterday, CSIQ, CSIC was reporting earnings today. They reported real big numbers, real big revenues, beat by a large margin. This stock could continue to move higher. I also think you want to keep an eye on CSUN. CSUN is kind of getting going a little bit here right now. I own some at $5.60. Let's go back to here, CSUN. I own some at 560, so it's just starting to get going again. I also am long a little bit of JASO, another idea that we had mentioned last night. I just got involved at $5.11 right here, and this is really one of the better looking weekly time frames. You also see the SOLF. is starting to get going in here today as well. That's Solar Fun. LDK is also having a good day, and LDK, LDL, LDK, LDL, LDL looks pretty good. I'll write that down and take a look at it later. But LDK is starting to get going a little bit as well. My preferred ones, at least for the moment, are CSUN and JASO. So that's it for now.